Hello everyone and welcome to my daily report market analysis videos on Friday the 7th of February with me, Richard Perry, market analyst at Hantec. It is non-farm payrolls Friday and we have the traditional consolidation across the major forex, a little bit of dollar strength and also a little bit of a risk aversion starting to creep back into the market, having had the risk rally of the last few days. Actually that dollar strength, well, has been a feature of the time actually. So even in spite of the risk rally, we still see that the dollar has been a currency of choice for the market, and that's a dollar rally at almost 4-month highs there. But it's interesting that we've seen equities breaking to all-time highs on the S&P 500. Futures are slightly back, just a shade, and that sort of helped to just moderate some of that equities rally that we've seen in Europe as well. But it is interesting that we're seeing a slight degree of consolidation hinted with a little bit of risk aversion today ahead of that payrolls data. Now, the coronavirus continues to extend through China, continues to see it accelerating cases and deaths, and they certainly haven't yet got a handle on it, and it's going to continue to be a key feature, I think, of trading in the days ahead. But for now, the markets are sort of focusing, I think, on more positive sort of glass half full type scenario with the data points that have come out in recent days. Certainly the PMIs this week have all been positive. We saw the ADP employment number on yesterday being a really strong number for the States. So that sort of sets us up for payrolls today. Now, this payrolls data is actually expecting 160,000 jobs on the headline non-farm payrolls. Now, that is interesting because the ADP number yesterday, if I show you a little chart on it, the ADP number actually was the highest since 2015 at 291,000. So how does that affect payrolls today? As I said, expected 160, but there has to be some upside risk to that, surely. Average hourly earnings expected to pick back up to 3%. So again, that would be a positive for the dollar and help to sort of provide further fuel, I think, for this dollar rally that we have seen in recent days. So that's going to dominate, obviously, the trading outlook of this afternoon. But if we do see a positive payrolls number, I think we're going to see risk positive, but also dollar positive reaction. Now, my chart of the day is Euro Swiss. I sort of talked about Euro Swiss in the morning report because it's really interesting. This very tight downtrend channel of 2 months, actually, of consistent lower highs, lower lows. Is this about to turn around where the euro has been under pressure? Euro has broken down below 110 big figure against the dollar, but the Swiss franc equally has not been doing all that well, and subsequently we're starting to see that Euro Swiss is arguably picking up, not decisively yet, and there's still a lot to do, but I'm really focusing on these momentum indicators here. The RSI, when I wrote this morning, the RSI was at multi-week highs, around 35 I think it was. Now above 40 would be a recovery. That really would suggest there is momentum in a recovery. But look at those MACD lines. Having bull crossed, they're now starting to find higher, as are the stochastics as well. So this would suggest that there's this downward momentum of this downtrend channel is slowing. The impetus is beginning to slow, and that would suggest that potentially that downtrend channel starts to break as a consolidation sets in, or we start to see a recovery, and a recovery would set in above this reaction high from last week at 107.35. That would form a small base pattern, and that would actually imply then a recovery back towards the 108.10 mark, which was this old key floor. So these are the levels that we need to start looking out for. Now we can look on the hourly chart whereby we've seen this, as I said, this slowing momentum of the selling pressure, and we're starting to see momentum indicators just picking up a bit. You've got a higher low at 106.90, which I really would say that needs to hold for this recovery to continue to build, and it's sort of just edging back towards that now, and you wouldn't really want to see that broken to the downside. But to be honest, I think it really does sort of hint at something that's building rather than that has been built already. I think it's a building effort rather than a recovery that is now imminent, because I think that this is something that's going to be happening in the next few days and maybe over a week or so. But there is something in this potential recovery on Euro Swissy coming up potentially now. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars. And we've got a payrolls webinar this afternoon. Thank you very much, and I'll speak to you soon.